Stock targets.
Hello everyone. Today we're gonna be talking about peak oil again. Peak oil is there today. The production rates worldwide are coming down and are going into a terminal decline. We have received many questions from our viewers on the consequences of the oil price spike of April 2008 and how the events unfolded after that. The 2008 Oil-to-TARP sequence. So here is what we have for you. This spike in oil prices was due to a relative scarcity of oil. Here is the spike of 2008. The economy was going full throttle at the time. But then the stock market crashed. We say that the stock market crash of 2008 was due to the spike in oil price, which preceded the events. But let's examine the sequence of events a bit closer. We have labeled this the oil-to-TARP sequence. The oil price first, and then the TARP bailout for everyone in the end. Okay, we need to explain the stock market crash of October and November 2008. First, the oil price spiked at $147 per barrel. That was in July 2008. Immediately after that, food prices soared, given the strong component of oil in the production of food, mainly for transportation and fertilizers. Then, these two elements combined created a quite substantial increase in the consumer price index. As the interest rates are merely a reflection of the rate of inflation, and the interest rates rose also quite sharply. After a sharp rise in interest rates, is there any surprise when mortgage rates rise sharply? And then the subprime rates. Any surprise there? Then the housing bubble collapsed. Any idea why the whole housing market bubble blasted? People were left with a lot of debt and no more home. Then several mortgage institutions collapsed. The names you know, Fannie Mae, Freddie Mac, even the ones which have been around for 100 years. Carefully explained, you now understand that the crash of 2008 was not due to nasty speculators, or a failing subprime scheme, or irresponsible bankers on Wall Street. The crash of 2008 was the consequence of the oil price spike at $147 a barrel, which triggered the whole sequence from oil and all the way over to the TARP bailout. And all this finishes with a good old TARP package to save the banks and all sorts of other institutions. And that is why we called this sequence the oil-to-TARP sequence. Here is the whole sequence again. Do we believe that such an oil spike can happen again? Yes, we do, especially in light of peak oil. Peak oil is there today. The production rates worldwide are coming down and are going into a terminal decline. It can take any minor event and the oil prices will spike again. Think of any political issue or any terrorist action. Do we believe that another equivalent sequence of events can happen following an oil price spike? Of course it can. Yes, we believe that if the oil price heads north of $130 or $135, the economy will again be in the same state as 2008 and early 2009. If an oil price spike happens again, how are your investments protected? If an oil price spike happens again, which is very likely, how are your investments protected? You need to figure that one out.
Stock targets.